Hi, a very good afternoon, everybody. We welcome you all to today's webinar on implications of the budget by Mr. Firoze Andhyarujina. We are very thankful to him for having this very informative webinar for us today. In case if you have any questions which you would want to get the clarifications on, you can post in your questions in the questions panel available on the right hand side. Now, I hand over to him the webinar to take it forward from here. Over to you, sir.
Friends, uh, the budget presented in 2018 by the Finance Minister is a watershed budget. It has some very novel and important schemes. It is trying to bring in the vision of India where the poor people get a fair share in the economic prosperity of the country. However, there is too much emphasis on providing shelter and various amenities and facilities to the poor people. But at the same time, the middle class, the upper middle class, and the rich have not got due recognition and benefit out of the budget. This year's budget has two major highlights. The first highlight of the budget is the scheme which is touted as one of the world's largest scheme, which covers health insurance for 40% of the Indian population. About 40 crore Indians would be covered, 10 lakh families would be covered by under the health insurance. It is a very novel idea. It is the biggest health insurance scheme brought about, and it is one step which is going towards a universal healthcare system in India. While the scheme is excellent, the question arises, number one, on the question of its implementation. Number two, the identification of the people, especially those who are below the poverty line and who need medical care. Third, the amount of premium that is to be paid. Whether the premium is adequate enough. As per the recent points, indications in the budget, the finance minister is making an attempt for having about 5 lakh rupees insurance per family. The premium payment would naturally be about 5,000 rupees. Thus, an allocation of 50 crores of rupees would go into the scheme for health insurance. The other issue is whether if a person goes who is covered by the insurance scheme, whether he would be entitled to the same benefits under a medical scheme of a general insurance taken out by the general public, whether hospital would entertain them or a public hospital would entertain them, or would it be only the district hospitals? That issue also needs to be considered. Further, the quantum of premium has to be determined, whether the insurance company would say that no, we are interested in having a group insurance policy. Whether in such group insurance policy there is adequate coverage, and the scheme itself would kickstart somewhere from October 2018. Long way to go. The idea is laudable. The acceptance towards universal health care, slowly I think it can be expanded if it is a success to the entire population of India. That would be a real success in this regard if we can achieve that. But the question remains about the implementation and about ironing out the creases and the issues which can arise out of it. The second highlight of the budget is definitely another very noble idea: to provide housing to all, including the poor people. The housing would be provided to all by 2022. In this regard, it is stated that 51 lakh houses would be built so that all the poor people are under a roof. Again, a very good idea, but there is a shift and emphasis on the housing, National Housing Bank, National Housing Project, how it will be implemented, at what stage, the construction, the time frame, the implementation. And I think a better scheme would be the central government wants to take the entire housing in its own focus, but it would be better to have a public-private partnership, even some sponsors, the builders, etc., should be given certain important uh, points on construction and development and infrastructure. The third important highlight and the uniqueness of this budget is also that the government says in order to encourage the youth employment, the government has taken upon itself the burden of paying 12% contribution to Employees Provident Fund for the younger age group who join employment for the first time, and the government has promised that it would pay the employees' contribution towards the Provident Fund for a period of 3 years. So another very noble idea. Every year, statistics shows that 36 lakh youth joined freshly as a new workforce. In this connection, it is absolutely mandatory that this kind of incentivization given to the youth, that the burden of employee contribution, which they have to pay 12%, is taken away by the government, is again very laudable step. So these are the three highlights of the budget. The budget also has some important characteristics. The first important characteristic is emphasis on agriculture. I would describe it as farmer-centric. The budget tries to improve the lot of the farmers by the modality of, number one, seeing that they get the higher procurement price for their products. The procurement price which a farmer would get is roughly 1.5 times more than the cost of production. This is good that the government sees that the farmers get a very high productive remuneration and procurement for their crops. The government is also thinking about giving a robust credit, farm credit. Banks would give some credit to the farmers so that the agricultural operations continue. There is no financial squeeze. And finally, it wants to have a footprint on crop insurance to see that the crop insurance is there, the farmer is adequately protected. These steps by the government on farmer-centric, as I describe it, is trying to give a boost to the agriculture and giving the farmer the benefit. But let me point out one thing, that agriculture and the cultivation of the lands, the jurisdiction is a state subject. It is a state subject, and there could be some opposition by the states if proper revenue doesn't come, or if there is some differences, because the union is now taking a lot of schemes on agriculture on itself, when actually in under the constitution, agriculture and agricultural land is a state subject. We had in 1617 a record food grain production. The food grain production in India was 275.67 million tons of food grain. With this kind of quantity of fruit grains that we have, I do not think that any person in India, rich or poor, can afford to go without having at least one meal a day. I think what is required is channelization of the cultivated crops, the produce, to go directly to the right channel, the abolition of middlemen in between. Moreover, what is required is better irrigation facilities, so that adequate water supply is given to the farmer at a very reasonable and a decent way. We need to increase productivity of the land. We need to ensure that there is proper distribution, distributive channels, to see that the entire crops and the food grains are correctly distributed. If we have too much of surplus, the follow-up building of warehouses is extremely important. The having and storage facilities is also very important. Preservation of the food grains, correct distribution, seeing that the farmer gets the right price and the middlemen do not take the benefit into account. I think that would be also a point to be considered along with these issues on agriculture. But there are no two opinions that the government has now realized the importance to the farmer, and therefore I describe it as farm-centric budget based on agriculture. The second characteristic is emphasis on education. It's very good. Though the budget allocation is almost the same, however, we find that if you take education into account, the finance minister has very correctly stated that the blackboard will be substituted by e-board. Very good idea. He has said that there are 24 new medical colleges to be established. For the first time in India, the emphasis now is on quality education. In spite of all this, attempts should be made to ensure at all levels that children in the rural areas at least get primary education. Primary education is very much required. But one interesting point to be noted in this entire thing is that a trend now is setting in India and globally also, but more particularly in India, that girls are faring much better than boys, that girls are doing well even in numbers and in academic records. Let me give you the recent statistics based on HRD survey. The Human Resource Development in a recent survey pointed out that in the field of science, there are 160 girls to 100 boys. In the field of nursing, there are even better 387 girls to 100 boys. So the girls are increasing as in commerce. In postgraduate commerce, there are today 154 girls to every 100 boys. So the girls, even at graduation level, post-graduation levels, have started entering the mainstream. I think a time will come when we require certain laws for level playing field, no gender discrimination, and I think on this, the government's emphasis on education appears to me to be quite laudable. The third important characteristic of the budget, as I see it, is that the finance minister in his budget speech said that he is giving emphasis to Aadhaar and he wants a unique identification number for all Indians in the entire country. At the outset, let me tell you that Aadhaar by itself is nothing wrong. The question is how Aadhaar is used. And the question is how others can take, assess, and have accessibility to the data which is stored in Aadhaar. Aadhaar has become a reality. There is an Aadhaar Act. Even the Income Tax Act under Section 139AA, last time brought about, says that Aadhaar is required for filing the return. You require nowadays, in order to file the return, the PAN and the Aadhaar connection, and then the return could be uploaded. Aadhaar is mandatory for filing the return. Aadhaar, as I said, by itself is good. But the question arises, how can others be prevented from having access to individual data because biometrics and other personal details and bank accounts have come into it? So the question now really is about data protection. The idea that universal identification is required and is acceptable is one thing. But the question of responsibility is on data protection. In this connection, I want to point out that the recent Supreme Court judgment very clearly brought out a landmark issue when the Supreme Court said that the right of privacy is a fundamental right. For the first time in the history of India, in the Constitution, the right of privacy has entered into Article 19 as a right of privacy being a fundamental right, also read with Article 21, which is guaranteed, and again in Article 14. This landmark judgment of the Supreme Court, which is acclaimed world over, which would require considerations even by various other countries to look into it, says that the right of privacy of an individual has to be respected. I want to point out at this stage that, see, in India, the fundamental rights can be enforced against the state, but it cannot be enforced against other people or against any other corporations. Privacy, as Brandwell and Keynes in 1894 said, is a right most cherished and valued by civilized men. It is a right to let me be alone. Now, with the advent of internet, emails, and other issues which come along, question which arises is that privacy and private data of a person which he does not wish to disclose, whether it can creep in public domain, thereby invading his right of privacy. The responsibility lies on the government when you bring Aadhaar is to ensure that the right of privacy remains, that the personal data of a person is protected and that others could have no access to them. Along with that is the concept of forced data to be given. Can you force somebody to give information, the forced information of a person? Would it amount to also violation of fundamental right? These are issues which are there, but the bottom line of all this, which I wish to emphasize, is that it would be of great responsibility of the government to ensure now that there is data protection. Once, if privacy is regarded as a fundamental right, the concomitant logical conclusion which follows is that there must be correspondingly data protection to see that privacy is correspondingly maintained. I think on this issue, certain points require to be considered. The fourth characteristic of the budget is the government has said that we want to digitalize. The finance minister has said digitalized India. Digitalization by itself is an extremely good concept. I think all over India, if we have digitalization, it would be exceedingly good. But don't forget that 40% of Indians are in rural areas. At this low level, do we say that we are prepared to bring in digitalization when people are not educated? In cities, in metros, in certain towns, people have access to computers, internet, mobiles. But to make it digitalized India, you will have to go to the very root and to the core issue that in the villages, whether the people know how to operate a computer, how to communicate through a computer, how to sell the products to the computer. This will require in turn a greater emphasis on education if you are talking about digitalization. It is very good that you think about digitalized India, but we don't have issues as fast as possible. The idea is noble. The implementation must be at a very quick pace. Take, for example, Dubai in the Emirates. Dubai has launched Smart Dubai Digital. It wants to bring in the concept that everything is digitalized in Dubai starting from 2018. All land records, all transfers, all licenses, all tenancy agreements, agreements between landlord and tenant, services provided, transportation, and all would be covered within the network of Smart Dubai Digital Network. They have also found out that by doing so, Dubai will be saving approximately 275 million man hours, translating into about $1.5 billion in revenue terms. So by bringing in digitalization, there is transparency, there would be less corruption. So good idea. But the question is, are the people ready? Are the rural people ready? It's only at the metros and at certain towns and certain cities that people are computer savvy and ready for digitalization. Are the entire Indian population ready for it? The government should therefore emphasize more on educating and making people understand the value of digitalization. Digitalization by itself, according to me, is very good. And the government's idea to get India digitalized as soon as possible is also very much move in the correct direction. The fifth characteristic of the budget, especially in the speech of the finance minister pointed out one thing. He came out with a sentence that Bitcoin is not legal tender. The emphasis that Bitcoin is not legal tender gives rise to various interpretations of what do you mean that it is not a legal tender. Before this, there have been 3 circulars issued by the Reserve Bank of India on cryptocurrency. Banks have also stated that those companies which run the cryptocurrency and which have the platform for doing this, their accounts may be closed. So one thing appears and emerges is that owning a cryptocurrency or doing transactions in cryptocurrency is not valid. The Income Tax Department has already issued notices to various exchanges and to various people having this Bitcoin and cryptocurrency. Cryptocurrency, which includes Ethereum and Ripple also, plus others. The question now is on that if a notice is issued for Bitcoin, which says that if you are owning Bitcoin, please declare it, make the payment, and over and above that, pay the necessary taxes. Number one, the liability to pay would be either capital gains, or number two, it can be income. When the finance minister in his budget speech said that Bitcoin is not a legal tender, the issue is whether having Bitcoin would amount to having an illegal currency. Because even under the taxation laws, the position is clear that even illegal source of money would be income and taxable. Therefore, I think this whole controversy on Bitcoin has now become very, very predominant and common in various countries. Other countries are also taking various steps to ensure that there is some regulation, some regulatory authority, how it is being done in the near future. Take, for example, UK, USA, in particular Japan and Korea, have also been thinking of bringing regulations on Bitcoins and cryptocurrency. I think what is required is that just saying that Bitcoin is not a legal tender or the income tax coming over people who are having in possession of them Bitcoins, the better cut would be to have as soon as possible a possible good regulatory legislation on the regulations of Bitcoins and cryptocurrency. Having looked at the world phenomena of dealing in cryptocurrency, it would be highly advisable that the government itself takes up some initiative and comes out as soon as possible some ruling on cryptocurrency. It can have its own methodology. Take, for example, again, I'm saying Dubai. In the Emirates, they have now launched M-Cash. EM for Emirates M-Cash. It is a methodology by which the payments can be made for all services, goods, transactions, transportations, etc. We can bring in similar Ind Cash or any other in coin or any other point as our own substitution in India, rather than thinking about how to try to prevent Bitcoin. Because according to the literal interpretation, as I look at it, you can't own a Bitcoin, you have to declare the Bitcoin, but you can't be prevented from trading in Bitcoin. Trading in Bitcoin cannot be said to be illegal. As long as if I trade in Bitcoin and offer my profits, nothing can be done. Therefore, in order that before the situation goes out of control and hands, I think so better that the government comes out with my two suggestions: some regulatory policy on Bitcoins. Number two, have our own Int coin, or as I pointed out, an Int Cash or M-Cash, whatever you want, but bring our own systems also before it is too late. These were the 5 characteristics of the budget. I now come to the proposals, the tax position, the slabs, the rates, and the entities. First, there is no change in the slabs and in the rates of taxes. I think this approach is not correct. Our threshold limit is 2,50,000 rupees, is too low. I think the government should have got the courage to say that we want to have 5 lakhs or 10 lakhs. It was absolutely imperative that in this budget, you should have increased the threshold limit to 5 lakhs. The argument of the government that if I put it at 2,50,000, I'm getting more people in the tax net, that argument cannot hold good. For the reason that, please note, we are dealing with taxation, the revenue for the government. We do not wish to merely add numbers or see that there are nil returns filed. We rather would like to have more revenue. To say that because up to 5 lakhs or 10 lakhs, if I have, a lot of people would go out of the tax net is not a correct logic. The whole argument is, how would I get the revenue? And to get the revenue, there should be certain incentives. Look at the step. There is no change in the rates, there is no change in the slabs. However, what has been done is that there is an increase in surcharge, the cess, by the government. Let me be very candid on that. The system as it prevailed today states that you have to pay 2% cess on primary education, 1% on secondary education and health, and higher education, So you had 2 components, 2% and 1%. Now what the finance minister has done in the budget is, instead of 2 plus 1, 3 composition, he has said there is only 4% cess, and called it by the name education and health cess. My objections is, number 1, normally you have a cess or a surcharge when there are contingencies. Take for example, if there is an earthquake, if there is a war, if there is a famine, if there is a drought, if there is a national calamity, there is every justification to have surcharge and a cess. But merely to say that you want to have a surcharge or a cess for health and education, 4%, thereby making the payment of taxes slab much higher, would not justify the point. I am quoting from the recent report of the CAG, the Controller and Auditor General of India's report, which said that whenever the government has levied a particular levy on a specific item for a specific period, for a specific from year 2006-7 to 2016-17, the government collected a staggering 83,497 crores by way of secondary education and higher education. However, it is now found out that in number of cases, the schemes on which the allocation were to be made has not yet been made. And further, there is no proper allocation of the amount in the public accounts. If this is the position, what is the question of increasing the cess? The finance minister should have, as he has already given emphasis to education, he's already given emphasis to health. You don't need a cess for that. There are other resources on which you can plan and get the money. I think, therefore, the increase in the surcharge and therefore corresponding burden of taxation on the citizen is, according to me, not justified. I wish to point out one thing, that for the salaried people, the finance minister has given some relief. He has introduced the concept of standard deduction. Standard deduction is originally a concept which was there in India. It was under the Income Tax Act. After a lapse of 14 years exactly, standard deduction has been introduced. According to me, it's much better than others, because standard deduction goes to the root of the matter. You have a gross income, less standard deduction at the very threshold itself, at the very beginning point. And then you start the computation of income, good for 40,000. But what the finance minister has done is given at one hand and taking away something at the same time. You give a standard deduction of 40,000, but you take away two things. Traveling allowance, which was there, of 19,200, medical allowance of 15,000 rupees. The net benefit is hardly anything. You have taken away two substantial things, little increase and given a little mercy of standard deduction of 40. The argument that employees have to give the bills and all that, that is the concern of the employee. What is the documentation to be given is a different issue. The basic fundamental issue, therefore, is that you gave a very good standard deduction of 40,000, but you should not have taken what was legitimately due, because this is a part of an employment contract on traveling allowance. Medical should have been given. But anyway, by bringing in the standard deduction, there would be an all-round benefit of 5,800 rupees for all salaried people across the board. To that extent, it is okay. I hope some little wisdom creeps in and the traveling allowance and medical is restored by the government, because the salaried people, as the finance minister has described, have paid a larger amount of contribution. Don't hit the salary classes, because that is hitting the middlemen, the middle class and the upper middle class. But with the seniors, with the salary, the greatest benefit which goes for the introduction of standard deduction, for which the finance minister deserves credit, is the pensioners. Because in the times of inflation, the pensioners have reason to rejoice. The answer being that the definition of salary under 16(2) would include pension. Therefore, the pensioners were not getting any benefit. Now, the position is that you have a pension, which is like a salary. So, all your pension amounts which you get, automatically you will be entitled to a benefit of 40,000 deduction from the pension payments because it is part of salary. Very good point so far as the pensioners are concerned. But pensions are received by people who have retired and who are old. And in this budget, the finance minister and the government has duly recognized importance of the senior citizens. I think so all provisions for senior citizens are excellent. The government is recognizing that senior citizens who have contributed throughout their life and now that they are old should be given certain benefits. The first benefit, which is a phenomenal benefit, and full marks on that, when interest on deposits with banks, which includes fixed deposits, savings accounts, etc., all bank interest, interest from post office and housing societies and cooperative banks, the interest received from the banks, where the deduction was permissible today of 10,000 rupees, has been increased 5 times to 50,000 rupees. Very good deduction granted to senior citizens. Secondly, those who have medical insurance. Senior citizens do require medical aid constantly with certain age. I think so all old people face certain problems. Therefore, they must have a proper coverage of insurance. The deduction under 80D for senior citizens, which was currently at 30,000, has been increased to 50,000, which is again good. But there is a caveat that if this amount is paid by another person, a dependent, say the parents are dependent on a son or a daughter, and if they make the payment on behalf of the old parents to look after them, then the deduction would be allowed not only of the parent, but his own contribution for the general public, which is at present 25, would also be allowed. So this is another good benefit for the old people. And the third one thing for the senior citizens, ill people. Critical illness as contemplated under section 80DEE, TDE, where the list of certain critical malignancy, etc., are prescribed. In these diseases and these points, the present law was that for senior citizens it was 60,000, super senior citizens over the age of 80 were entitled to 80,000. Now the finance minister says all senior citizens who suffer from critical illness would be entitled to a deduction of 1 lakh of rupees. Please note some misconception that only if you are hospitalized you will get it. The answer is no. As long as you are suffering from any critical illness as in the schedule and the rules annexed in 80DDE, even if you are at your home, but the expenses are incurred on your medical bills, etc., you preserve the bills up to 1 lakh of rupees for all critical ill people, senior citizens above 60. The deduction can be claimed, not necessary that you should be hospitalized in order to claim the deduction for critical illness. I think so. One more point also, which for senior citizens, which a concession is made, that there was this fund and a contribution to be made with the LIC where the government assured that for senior citizens, the rate of interest, as is falling everywhere, and in the banks you get about 6%, here the assurance is 8% interest. Of course, it is taxable interest. So 8% interest up to rupees 7,50,000. That limit of 7,50,000 has been pushed and increased and made double up to 15 lakhs. Scheme would be on tap up to 2020 as I look at it, and therefore I think so the senior citizens, in order to get a more benefit if they think, can also shift and transfer funds now from 7.5 to 8 to 15 lakhs with 8% interest. Only one point, that the government for the senior citizens, when they get this amount, should also see that the interest is not taxable. Just a suggestion to be taken into consideration. For the senior citizens, the government has realized the benefits that senior citizens had contributed earlier to the economy, to the country. Giving benefits is respecting the senior citizens, which is very good. I want to bring out one further point, one further suggestion to the government. For at least a majority of the senior citizens, if they filed a return, the law should provide that their returns would be accepted and there would be no scrutiny as a matter of respect, unless you find something fishy, unless there is some sale of huge properties or there is diversion of funds. But otherwise, a return of a senior citizen should normally prima facie be accepted. I think this suggestion to the government should be taken in all seriousness. These are, along with this, in the entities now, you have got a trust, the laws of trust, those which are covered by Section 11 to Section 13 of the Income Tax Act, the charitable trust. For charitable trust, provision has become more stricter, that if by any chance, if a charitable trust who is claiming exemption under 11 makes a payment of cash, a cash payment exceeding 10,000, that would be disallowed. And further, that any expenditure incurred on which TDS was required to be deducted, and if the tax is not deducted on source on such expenditure, then that expenditure would not qualify as a deduction in claiming the income of the charitable trust. In other words, the provisions of Section 40AI as it exists for companies, the same is imported in the trust. I see nothing wrong in introduction of such provisions, because with the emphasis less on cash transactions. However, I am of the view that if there is a necessity, then the provisions should be liberally construed. That brings me now to companies. I think so far as companies are concerned, the finance minister says that we are bringing the Indian companies in par with the world companies so that our exports increase. The finance minister in the budget the tax rate for companies to 25%, provided the turnover of the company does not exceed 250 crores. For all companies over 250 crores, the rate remains at 30. With the increased surcharge, the burden increases, it is more than 35%. My argument is that exempting up to 250 crores turnover covers a large group of companies that have 25%. But don't forget that it is the main big companies who are really contributing and who are really competing internationally. You were told at the initial stages that rates of all companies would be reduced to 25%, and we are cutting the incentives. The incentives to the companies have been cut. For bigger companies, the tax rate continues to remain at 30%, though 4 years have passed. I may point out in this connection that we need to be competitive. We would need to look at the ASEAN countries. I'm talking about the ASEAN countries, the South Asian countries. The rates of tax of the South Asian countries normally vary from 12. You are telling us to compete with the large companies when it is almost double. For companies, it is more than 35%. For big companies, I think when you take away incentives, at the same time, this provision of 25% should not have been embargoed with 250 crores, but it should have been without limits for all corporate sector up to 25%. That should have been, according to me, a good level playing field for the Indian companies to compete about. That would have increased even the export potentialities. That could have made the goods in India more attractive. Talking about incentives, I'm reminded of a quotation from the recent book by Dr. Y.V. Reddy, former governor of the Reserve Bank. In his recent book, Advice and Dissent, My Life in Public Service, says that when the poor receive government money, it is called subsidy. When the rich receive money from the government, it is called incentive. What I'm trying to emphasize is that you took away the incentives, but at the same time, you should have brought out the corporate at a level playing field for all at 25%. Maybe next year the government will think, or even now, the rate of tax for the corporates, irrespective of turnover, should be not more than 25%. Now I come to two important focus of the budget. The emphasis and the focus of the budget is on two main provisions. First is the long-term capital gains. Lot of debates, lot of issues on long-term capital gains. See, to give you a little background, formerly we had long-term capital gains, but the government brought out a very good idea to curb some illegal practices. It introduced a security transaction tax called STT. The STT was levied both at the time of purchase of the shares and the sale of the shares. The government got the revenue. Please note, STT is to be paid even if you sell the shares at a loss on any purchase and sale. And thereby, the long-term capital gains was slowly removed. Now, to bring back long-term capital gains just because the market has increased, please note, India is one of the finest performing stock markets in the world. It's almost number 3. Please note further that stocks and investments in securities is now required because the government has brought out the demonetization, the curbs in gold, the attraction from real estate, gold, and other modes of savings has been shifted and channelized to the stock market. even through mutual funds. That is why the market is behaving in this fashion, because formerly we were at the mercy of the foreign financial institutions. Now, with the domestic institutions pouring in money through the mutual fund, the dependency and the legacy of the foreign financial institution is totally removed. Therefore, you bring in long-term long-term capital gains in the budget is primarily and prima facie disastrous for the investor. In this, the provision, let me analyze it for you. First, you take three variants. The first is actual cost. The second is the peak value on 31/1/2018. And the third is the sale consideration whenever you want to do it. Let me illustrate. If you had purchased a share in, say, 2015 for 100 rupees, the price on 31/1/2018 is 300 rupees. You sell it, say, in November 2018 at 500. First, you compare your 180, the higher of the two. So here, in our case, 300. That you deduct it from 500, which is the sale consideration minus the price on 31/1/2018. Of course, there is no concept of indexation coming into play. Now, the difference, say for example, the gain is 2 lakhs. What happens? 1 lakh is exempt. So the argument is that up to 1 lakhs, if you make long-term capital gains, there will be no capital gains. Over 1 lakh, you have to pay. So in our illustration, if you make a gain of 2 lakhs, 1 lakh is exempt. For the remaining 1 lakh, you pay 10%. That is 10,000 rupees. In other words, for every gain of 2 lakhs of rupees, you have to pay 10,000 rupees. It may upset the plan of certain investors who had planned to invest in stock markets and in mutual funds of equity for some future contingency or for some particular event. Bringing in long-term capital gains at this stage when the market is flourishing, you need encouragement. You don't need a tax on long-term capital gains. The finance minister, if he wanted, could have increased a little bit of the STT. He could have also increased the period, say, from 1 year to 2 years or 3 years. But to bring in a provision of long-term capital gains, according to me, is very difficult for the average investor. And that too, it extends to equity mutual funds also, which were exempt up till now. Certain issues, let me point out. First issue, if you bring in long-term capital gains, there is no justification whatsoever for charging STT. History shows that STT was introduced as a mode of substitution for long-term capital gains. You can't have both. Here what is done, you have retained STT, you have also levied long-term capital gains. Second issue, just confusion, but I want to clarify at this stage that at what stage and at what event does the law come into effect? Because the finance minister says two things, that I'm introducing this from 31/1/2018. So that is the date or the benchmark. He also uses the grants, which means that securities purchased earlier would now not suffer a tax, but the value of that would be now looked at from 31/1/2018. If at that, the provisions are very clear. The finance minister has made it clear in the memorandum and the act that the scheme will come, the long-term gains liability arises only from 1/4/2018. So if you sell shares after 1/4/2018, then you are liable to long-term capital gains. This would require, therefore, some planning. Whether you think a particular stock has potential of increase after the 2 months in the next 6 or 8 months. If not, advisable to sell it now because there is no long-term capital gains up to 31st March, rather than wait up to a later date where the gains suffer long-term capital gains. This issue. Third issue, government has brought a legislation which is being implemented in a very arbitrary manner, as I would say. The provisions of Section 14A taxing dividends on exempt assets. The argument is these are exempt assets, they do not suffer tax, therefore 14A disallowances are made of certain amounts by virtue of a formula given. The argument is that once if shares suffer long-term capital gains, then they cease to be exempt assets. Because if I sell it, I naturally have to pay tax at 10%. Therefore, there is no justification of keeping 14A on the statute book for dividends. There is no changes made. I think the finance ministry should look into the issue of 14A because the words exempt assets, now this shares cease to be exempt assets. If I were to sell it after 1st April, then naturally they suffer tax. So you want me to suffer tax. You also want me to pay STT. You also want a disallowance under 14A. Where will it stop? I think some rational thinking and brainstorming on the issue of 14A is also required. Coupled with this is another very contentious issue of loss. If I have a loss, the general position is a long-term capital gains can be set off against long-term capital loss. The second proposition also is very clear that if I have a long-term capital gains, and again it can be set off, and the long-term capital loss can be allowed to be carried forward, adjusted in subsequent years against other income also. Now, the issue is, am I entitled to set off the loss when it is still an exempt asset? There is one particular thought which comes to my mind. There is a tribunal, Mumbai tribunal decision in the case of Raptopos, which is 69 SOT, special orders of the tribunal. 69 SOT page 383, where the Mumbai tribunal held that if there are exempt assets, then the loss cannot be allowed to be carried forward. This can come a lot in a very difficult way on the issue of carry forward of the loss, and this may lead to a huge litigation. I think there is still time. The finance minister, I think, looking into the buoyancy of the market, looking into how the market has moved. The stock market is the barometer of the country's economy. That shows your sign of progress. Don't go and scuffle it. To bring in long-term capital gains at this stage when the economy has just taken off, after some hiccups of demonetization, the initial stages of GST, at this stage when the stock market, after being reacted, has picked up, performing well amongst the three best stock markets which have performed, don't scuttle it by bringing in long-term capital gains. There is still time to rethink, increase STT, increase the holding period, but please don't go ahead for this main focus of the budget, which I call is the long-term capital gains. The second focus of the budget, the finance minister has said that all companies must follow the ICDS standard. This is the Income Computation and Disclosure Standard prescribed by the Institute of Chartered Accountants. These are like accounting standards. There is no two opinions that accounting standards are part of the Income Tax Act, Section 145, 145A has brought all these standards. Now what happened? It's a simple point which is blown up unnecessarily. These accounting standards, if you see any recent balance sheets, the auditors qualify and even the director's report make a point very clear that ICDS standards have been followed in preparation of accounts. The objection by the accounting people and by the companies is that you are preponing the income. Could be right. Secondly, there are settled judgments of the Supreme Court, and in spite of that, you are bringing in a standard contradictory to the Supreme Court judgment. Take, for example, issues like stock in trade, inventory, fluctuations in foreign exchange, mark-to-market price, etc. Now, in all these things, actually speaking, if you ask me what is the difference, ultimately they have to be taxed. But it is a matter of timing difference of accrual or on receipt basis. This is the they say that you have to account it right way. Take, for example, one case. Take the case of fluctuation in foreign exchange. There's a judgment of the Supreme Court. In Woodward Governor versus CIT, which is reported in 294 ITR, page 451, Supreme Court. On fluctuation in foreign exchange, the Supreme Court has very clearly laid down that at this stage, standard says something totally against. Moreover, these standards were introduced by a notification, not by legislation. Hence, the Chamber of Income Tax took up the matter in a writ petition before the Delhi High Court. The Delhi High Court, in the judgment, which is of 24th November 2017, pointed out that the standards to some extent are ultra virus because it is based on notification. Secondly, they took a few standards, analyzed it, and brought out that they are against various decisions of the High Court and the Supreme Court. To that extent, they were struck down. Now the government says that we are introducing what was in the notification by a legislation in the Income Tax Act itself, whereby we say that the ICDS is mandatory and all companies must follow it and make accounts on the basis of ICDS and present the same to all. They have also mentioned that those who have not done it should file revised return and pay tax and interest. The whole point is this is only a matter of timing difference. It's blown out of proportion unnecessarily. Whether you accrue the interest this year on receipt or accrual basis is a matter of great debate, and the courts in a large number of cases have supported that. So therefore, accounts are now to be made on the basis of ICDS presented, but the problem is those companies which took resort to the Delhi High Court's judgment did not prepare on the basis of ICDS. all those companies have to file revised return and pay interest also on that. Very difficult to say whether this is legislative or retrospective or retroactive legislation. I think the question of interest should not, for the time being, be levied. It could be waived. Government could give a certain time frame that within this period you file the returns in conformity with ICDS. No interest to be charged. Of course, in my opinion, cannot arise. So these are the two main focus of it. Arjun, I will just touch a few provisions very quickly. One provision which deals with compensation, enhanced compensation, or any type of compensation which you receive. The law is now well settled, and I think a good amendment where compensation received would be taxed in the year of receipt. Number two, also continuing with compensation, we had a situation where, by virtue of modification of a contract, there were payments made. Assessees were saying that the payment that I received is on account of capital receipt. Take, for example, non-compete with the employee and the employer that, yeah, I will not compete for so many years. Therefore, the compensation that I receive, great controversy whether it is income, business income, other sources, capital receipts, etc. All that controversy again is got out. So less litigation by bringing compensation received from modification or any amounts you receive from a business contract is business income. Any modification of a contract and amount received salaried people would be income from other sources. So the law in this connection appears to me to be very good and very clear in this regard. There is also a point that if you convert your inventory into a capital asset, in other words, stock in trade which you are showing is now changed into investments, then the position is that you will have to pay the tax in the year of conversion at the fair market value at which the price you are converting the stock into a capital asset. Another good provision, that there is variation found in a number of times between between the value mentioned in the agreement, especially for sale of properties as contemplated in 50C, where the stamp duty ready reckoner valuation is required to be looked into. The ready reckoner value, say for one particular locality or one particular area, is pegged at one amount. There may be a good building, there may be a dilapidated building, the same value applies. The finance minister has brought in a good amendment by saying that 5% leverage would be granted over the ready reckoner price, and your value, if your agreement value is within the parameters of 5% of the ready reckoner stamp act valuation, it would be allowed. And one other point is that 54EC, when there is a capital gains on sale of bonds, and when you realize the capital gains, you had an option of investing up to 50 lakhs of rupees in exempted bonds under 54EC. For example, bonds like which are issued by National Highway or Rural Electrification Corporation, etc. The bonds were, if you do up to 50 lakhs, were totally exempt, and you get a 3-year holding period and the interest on that. Now the law is amended, which says that the 54 EC benefit would accrue only on land and building. In other words, all other assets are totally removed. By removing the other assets, say sale and capital gains on shares, jewelry, gold, artwork, etc., all is thereby removed. You can get 54 EC bonds advantage only if there is sale of land and building. And moreover, remember, the holding period, which is 3 years, has been increased to 5 years. There are number of tinkerings in the budget also. E-assessments, good. But are we prepared to that? There must be given an option of physical or e-assessments. Slowly, slowly, good point. Then you have got other benefits plus certain penal provisions that all companies, whether they make profit, loss, if you are a company, you have to file the return. If you do not file the return, straight away penalty would be attracted. And there were a number of provisions, but one last provision which I wish to deal, very good provision, 143(1)(a), that where there is a prima facie adjustment made by the assessing officer. Normal trend is on the TDS mismatch, AS26, other person has not filed, if there is a mismatch, you have honestly given, there is a difference. The difference is raised against you and a demand is made. Now the law says that the prima facie adjustment would not fall so far as the non-reconciliation between the AS26 and what is filed by the assessor. On the whole, in my opinion, there are still number of points, but I would like to conclude here. The budget, the attempt made is good. The thoughts given are very noble. The focus is very much on the lower sections of the population. But two things point out in this budget. Number one, the way the budget is harnessed, it reminds me that it is robbing Peter to pay Paul. This is exactly what is being done in the first instance. And number two, the finance minister and the government must realize that you allow also the higher sections of the society to prosper, because if Indians are rich, then India is rich. Thank you.
We have a few questions.
You read the questions.
Let's do that. Yeah, definitely. So we've got a few questions for the benefit of all. The first question is by Mr. Mahesh Chauhan. What is the meaning of developing gold as an asset thesis and how it will help?
Developing gold as an asset, is that right? What is
Yeah,
there is
asset
no
class.
what he says is that the gold monetization scheme and developing gold as an asset is good, but the schemes are yet to be announced in both the cases. There is no proper scheme which is given up till now on what is and how the gold is to be done. But I think the government is trying to regularize the gold and the dealings in gold in a much standard way.
The next question is by Mr. Sailesh. We really appreciate government's efforts on healthcare. What's your views on the implementation of the same?
As I said, the implementation, Sailesh, is reasonably difficult. The scheme is very laudable, I said. Roughly what is required is approximately 50,000 crores. But in the budget, there is no allocation at all. First, of the amount. And second, how do you identify? The biggest problem, how do we identify people really below the poverty line? How do you identify? How do you cover them? And if you have covered them, whether the hospitalization and the benefits would percolate, even for them, which would be the best at the private hospitals or public hospitals or which hospitals, all these modalities would have to be taken into consideration, including the premium part.
The next question is by Ms. Viprika. What is your take on the new tax relief measures for the salaried employees?
I think it is okay because also, as I pointed out, everybody benefits up to an extent of 5,800 rupees, irrespective of the salary you earn. The government could have, at the same time, retained, as I said, traveling allowance and medical expenses. Salary class people have contributed tremendously. Bringing in standard deduction, according to me, is a good idea.
I think next question is on the same lines. Is there any phase-wise reduction in the tax that we see in the next 3 years?
Phase-wise deduction, whose question is this?
The same, Viprika.
Viprika, according to me, I said in the next 3 years is very difficult for me to predict. I'm not an astrologer. But I think this time itself, the government should have increased at least the basic threshold limit from 2,50,000 to 5 lakhs or 10 lakhs. Let me tell you one more thing. As I said, we don't require huge numbers. We require revenue. As it is, the real cream of the revenue comes. 82% of the contribution is by people whose income, or the companies whose income is over 1 crore of rupees. If I were the finance minister, I would say that let me start with the threshold limit of 1 crore, because those are the real people, and let me concentrate on some good legislations which the finance minister has brought. Brilliant legislations which India required long ago, the Prohibition of Benami Properties Act and the excellent Insolvency and Bankruptcy Code. These are the real legislations which uptake the economy. So I think spare all these small things, catch over the black money, catch over all the big deals, bring the threshold, start it from 1 crore onwards, keep and trust the people of India as being honest.
How do you interpret the budget's focus on the affordable housing?
Oh, on the affordable housing, the emphasis are there. But see, there is a little shift. The government, the union government, wants to take up now the whole project of housing in its control by having a housing bank, National Housing Bank. In other words, there is a shift from the private sector to the government, and the government's whole intention of bringing affordable housing, according to me, is good. The idea that everybody should get a house and a roof over his head by 2022 is laudable.
Is the budget of 2018, as in how do you interpret it, to be a populist or a reformist?
Now, I don't think it is either populist or reformist. The budget is, in India, given too much importance all the time. I think the government, as I said, has done a lot for the poor, the real lower class people. But I think at the same time, they should have given a big incentive even to the other class of people, reduce the tax rate. That is what I look into it as a very important step. You see, let me, in the budget, the government is trying some good steps. Take, for example, it said that they want to have a uniform stamp duty across India. Today, all states have different stamp duties variation. They want to bring the Indian Stamp Act in one particular way. Good efforts, according to me. It is neither populist, it is neither reformist. It is a budget which is more farmer-centric and more for the poor and depriving the rich.
Whether the tax will be deducted at source from payment of long-term capital gain to a resident taxpayer and FIIs?
Oh, so you want to know whether TDS would be required to be deducted? The answer is 100% yes. The TDS is required. Take, for example, I'll give you a little technical point. See, between India and Mauritius, India and Singapore would be better. Let me put it. There is in India and Singapore, there is a recent multilateral agreement which is signed. Capital gains is exempt in Singapore. Now it is taxable in India. The government says we want to tax the capital gains in India, which is the source or the resident state where the shares are located. Now, for 2 years, they have said in 2017 itself that capital gains would be taxed at the rate of 5%, 50%. That is 5% of 10%. That is taxed. The TDS will have to be deducted, or the foreign financial institution will have to pay tax on the capital gains. But tax is to be done. TDS is required to be deducted in the source country, that is in India, where the shares are located.
The next comment is, thank you for the informative webinar. We would like to know your views on what government should take as an initiative to make India a digitized country.
I have, what's the name?
It's me who has.
I think on digitalization, I have already said we take a model from Dubai and try to digitalize, but digitalization, according to me, is an excellent initiative.
The next question is, what are presumptive tax?
No, there is nothing on presumptive tax. Presumptive tax means that whatever you earn the income, that is chargeable at a flat rate. You need not maintain accounts. You have to pay it at a particular rate.
The next is, please share some thoughts on the dividend distribution tax on demand dividends.
Deemed dividends.
Yeah.
I thought that was a very technical point to be said. You see, so far as deemed dividend is concerned, under 222, Section 222 of the Income Tax Act, so notional deemed dividend of a company, and when a loan is given by a shareholder who has substantial interest in the company on the repayment of the loan or giving of the loan, that is regarded as deemed dividend because of substantial interest. However, there were a lot of controversies as to who pays the deemed dividend. Now, clarity is brought, which is good, which says that it is the company who will be liable to pay the dividend distribution tax when it distributes the dividend. So the shift is from the shareholder to the company. So now it is only the company who will be liable for dividend distribution tax, even on the loans received, which is construed as dividend distribution tax. This is one aspect. Second aspect is on dividend distribution tax. Mutual funds are now subjected to equity mutual funds who declare dividend were not liable for deemed to pay dividend distribution tax. Now all mutual funds, when they declare a dividend, will have to pay dividend distribution tax. Equity funds, not debt funds. Issue. In India, company makes a profit which is taxed. It declares dividend that is taxed. There is also this notional concept of deemed dividend which is taxed. And when the dividend is received in the hands of the shareholder, over and above 10 lakhs of rupees, it is also taxed. Principal canon of taxation is that the same income cannot be taxed twice. Here is a focus where income is not taxed twice, but the same income is taxed thrice. So according to me, this dividend distribution, at least on individuals or on dividend received over 10 lakhs, should be removed.
What will be the treatment of the long-term capital loss arising from transfer made on or after 1st April 2018?
I have already discussed this issue. According to me, the loss should be allowed to be carried forward. But I told you there is some problems, because if you say that this is an exempt asset where 14A applies, then there is a question of litigation which can, but the simple answer is loss should be allowed to be set off and carried forward.
With the introduction of long-term capital gain tax, does it make sense to sell and buy back the long portfolio?
Yes, that will require some adjustment. As I said, the potential, how would it be benefited? But see, the benchmark is made of 31/1/2018, which is pretty nearby. Secondly, I want to point out my view that it is not the closing price of 31/1/2018. You have to take the peak price on that date, not the closing price, the peak price on that date. I think this will require adjustments. The future potentiality of a stock has to be examined. But if you want to play safe, you can sell it before 31st March and pay no capital gains tax at all.
Is it true that if I don't file the returns on time, I'm not eligible for
Oh,
deductions?
yes, you are very right. You are right. There is a small amendment. You need to look it with a magnifying glass. In 80AC and in clause 23 of the memorandum explaining the provisions, the finance minister now says that you have to file the return in time before due date. So all returns not filed before due date, the benefit of ATC, for example, the provident fund that you public provident fund contribution up to 1,50,000, if the return is late and not filed by the due date, say for an ordinary individual 31st of July, you lose the benefit of ATC.
This seems to be the last question. How do you think the proposed gold policy will really help the Indian gems and jewelry sector?
Okay, now there is, first of all, the proposed policy. According to me, I have not seen the proposed policy. The real schemes of gold monetization, gold policy are yet to be announced. So unless it is brought into focus, you do not know. You see, if you look at the recent trend, you people may be knowing more. The gold imports into India in the month of January has been the lowest compared to a number of years. Maybe the shift and the ideas, but a gold policy is required whereby regulation of gold, a gold exchange would be very much appreciated for dealings on spot and future, both issues, and a policy with leniency because in India, people tend to love gold.
So I think those are all the questions that we had for today. With this, we are good to close. Thank you very much for attending this webinar with us today. Thank you very much, Mr. Firoze, for having this very informative webinar for us, for everybody, and it was a very good interaction with you today. Now we are good to close and end the session. Thank you very much, everybody.